Hello, and thank you very much for having us here with the new episode of FinFluenced. In this one, we are having a good conversation, hopefully, with Dion Lisle, who is the managing partner of 40 Grand. So, hi, Dion. Tell us a little bit about yourself and how did you get here? How was your journey to get here?
Thanks, Jermaine. I bill myself as the Rosetta Stone between legacy banks and fintech startups, and I got there by doing both. I've been in the largest bank in the world, Citibank, in their venture group years ago. I was at First Data's venture group, but I've also been employee 7, 8, or 9 in a number of different startups. None of those startups were gigantic unicorn successes, so I still work for a living. And what I do now is, as the managing partner of 40 Grand, I work with community banks from, call it 250 million on the low end up to 10 billion on the high end in assets. And I help them with their digital innovation strategies, roadmaps, and delivery.
Oh, that's great. That's great. And in that journey, how have you seen the banking industry evolve over the past few years?
Yeah, you know what's interesting about that, Jermaine? I just came back from a trip to Denver and I visited a couple banks. And what's interesting is there's this bell curve of banks in the community bank region. And there are those that are like, oh, we're doing okay. I'm like, you need to be more digital. On the high end, I get banks that are actually changing a lot. They're moving to a cloud core. They're looking at fintechs. They're investing in fintechs. They're engaging. And they're really shifting all of their paper processes to digital. In the middle of that bell curve, I'm finding a real mix. What I'd say the number one priority right now is efficiency. Every bank I talk to talks about efficiency. It's a ratio that they look at. How many FTE, full-time employees, does it take to process a mortgage or to process a loan? And I think the biggest accelerant, and Jermaine, I know you've seen this in your business, the pandemic and the PPP lending for these banks drove a ton of activity they weren't ready for. They had to do it manually. They had to force feed it. It was really difficult. Every bank I talked to was caught unawares by the need for digital in PPP lending.
And what, it's of course the pandemic enhanced the need for or augmented the need for digital tools to handle not only the demand, but to use the channels that were alternative to the traditional channels of the banks. And so banks were not prepared to, use these new channels or I would say super use these new digital channels, because from one day to the other, everything became digital. And so how did you see that move?
Well, what's interesting about that is, for the most part, they just threw bodies at it. They just worked harder, they worked later, and probably burned out quite a few employees on the way, to be perfectly honest. But it did wake them up to the fact that they have to go digital. So what I'm finding banks doing very intelligently is pick a process. Onboarding. Let's make onboarding digital or more digital. Let's use the new API infrastructure. Let's use tools so that our customers, whether they be business or consumer, can get on board and get interacting with the bank faster in a compliant manner, of course. I did hear, it's funny you mentioned the channel thing. I was in Denver and one of the banks actually said to me, we really need to look at our omni-channel activity. And I said, wow, it's the first time I've heard a bank use the word omni-channel in a sentence. And what I realized was we in the industry, in the fintech side, we talk omni-channel all the time, but it was nice to hear the banker talk about it. And they had just built a beautiful new office, beautiful branch in downtown. And it was really nice. But they also recognized even the customers that come into the bank need a mobile app, need an interface online. They need to do things digitally, even if they come into the branch. So omni-channel is what the banks are waking up to, which is great.
And what are the top three care abouts that you have heard from them in that regard?
Yeah, right now, what I'm hearing is really consistently are these banks in the $1 to $10 billion size, they want to connect to their small business users more. They want to have digital interactivity with those small business users. They want to be able to take what I call the great friendly handshake business, the personal touch, add that to digital, and what I call digital plus personal equals concierge. They want to offer concierge service to these small businesses, right? So if you're a local business, they want their banker to be able to talk to them about their business as a strategic partner would. The next one is onboarding. They just need customers to onboard faster. We hear onboarding more than we hear anything else. And then finally, I think it's data. Like they know there's data there. Like they have transaction data. They don't know how to analyze it. It's not structured well. So I told a banker this week in Denver, one of the things, he asked, what fintech should we engage with? And I said, wait, first have a data strategy. Then we'll talk about what fintechs to engage. Because if you start to get a bunch of data, plus your core data, plus this, plus you're converting stuff, and you don't have a data plan, you're going to end up with a lot of garbage data. So what I really encourage banks to do is get a data strategy first. That's step one. And they seem to get that once we talked about all the data that would come in and what they could do with structured and unstructured data.
What kind of technologies do you think that the banks are looking for or are seeing to implement in this area?
Actually, you hit the nail on the head, Jermaine, which is they're really looking for the anticipation. And in the SMB space, particularly what I like are solutions that allow the banker to go to a customer and say, hey, in December, it looks like you're going to have a cash flow crunch. Why don't we get a line of credit lined up for you now in case you need it when the holiday season hits and you have to meet payroll or you have to buy more supplies. And there are tools with data that you can look at that and anticipate those future cash flow crunches or future needs for payroll, whatever the case may be. And I think that's what most bankers don't yet recognize because they've never had a data strategy. Data gives you insights, insights gives you action, and those actions can help you better serve your clientele. And it's probably true on the consumer side. I always tell bankers the story that I bank with Capital One and they send me refi offers, but I don't own my home, I rent. You could look at my statements and tell that I write a check to a guy every month. I sold a home years ago and I don't need a refi, but how do they not know that, right? Because they're not looking at the data with a lens that gives them context into me as a customer. This is the thing that I tell banks. Understand the context of your customers' actions, their transactions, what they're doing, and then you can better anticipate, Jermaine, exactly as you say, anticipate your customer needs, then you differentiate your bank, and then you win.
What do you think are the main reasons that are you finding out there that the banks are, not going into or not translating all these elements that you just mentioned into actions, or I would say immediate actions, or are they?
So honestly, Jermaine, there's three things. In these banks, the board of directors are made up of, I hate to say it, but they're male, pale, and stale. They're 72-year-old guys with no digital experience. They come from the auto industry. They come from manufacturing. They come from the lumber industry. And so the board of directors doesn't understand what the bank needs to do. Most of the CEOs I meet are very forward-leaning, digital, ready to go. The other part of it is, so the CEO's here ready to move. The board says no. Below them, the employees resist change. They think they're going to be replaced by digital. But what I encourage bankers to tell their employees is this will enhance your job. This will make your job easier, more interesting, more engaging, and you'll be able to better serve your clientele with digital than you would without. I tend to find most people, once they see the impact of digital, get very excited about it. They're nervous about it before it's implemented. Now, I've had bankers on the lending side say, our employees won't use the tools that we put in place. Well, did you educate them? Did you train them? Did you sell it? A lot of bankers, they invest in digital and then they have no go-to-market plan. They don't even communicate it. I'm like, well, where's your PR? Where's your advertising? Where's your communication? And they're like, oh. So, you have to go all the way through the process, right? You have to tell everyone how great it is. You have to sell it, internal and external.
Yeah, because at the end, is you need your customers to change the habits. So going back to the efficiency ratio, if you don't sell that you have something that is better for the customers and at the same time has an impact on your efficiency, it's like you are fully relying on your customers to pick up with the investment that you made.
Exactly.
So it's that's a good point of advice, because I've seen that as well. Some banks are investing, and at the same time, they sort of complain because the customers don't pick up the new things. But it's a change of habits that every one of us has to do. We did it, someday in the past. Some others are doing it later. But I always say, we are all millennials now. I've seen, I've seen a recent report that was published by American Banker about humanizing in banking. Humanizing banking is it called, and one of the aspects is realizing that the millennials are the ones that are driving the change, but the other generations, Generation X and Gen Z, are not that far. It's like everybody, even boomers are picking up. So that's something that you need to push everybody to that new world.
It's funny. My son interned for me this summer at 40 grand, and he's 20, and he didn't have a bank account or credit card. So I said, without me influencing you, Dylan, go get a credit card and all of those financial tools. He did all his research. He looked at Chime. He looked at, the big banks, small banks. And I won't say the bank's name, but one bank he hated because the mobile app was so slow. Because he's like, I'm going to do everything mobile. He ended up choosing, and I will say, Discover credit card for the points and Cap One for bank, because Cap One had the best mobile app in his opinion. Now, sorry for all my community bank friends that he didn't choose you, but I thought it interesting that here's a 20-year-old and he chose a Discover card and a Cap One, both legacy players, because of the face-to-face experience and the points. But I think that's what every bank needs to do. And Jermaine, I like that you focused on differentiation. My boss at Citibank used to say, banks and hotels suffer from the sea of sameness. If you stay at a Hilton or a Marriott, it doesn't matter. They're the same, right? If you bank with Wells or JP, doesn't matter. Service makes the difference, and now apps and the tools online make the difference. And banks that aren't aware of that are going to be left behind.
Yes, exactly. And that's why we also make tools, technology enablers, like our next generation core, that allows not only differentiate on the front, on the user experience on the app, but also differentiate on the products that the bank can offer. If something came up, a need came up from the customer side, the bank can respond immediately and create a product, a service right at the point of need where the customer, actually needs it. Because if you wait 6 months, the customers, the world is changing so fast right now. So in a blink of an eye, you change something that is something that is new. It's already old. Apple is launching phones every year now.
It's true. It's true. Well, look at as good as Google is at technology. Look at the Googleplex checking account bank offer. They had to pull the plug on it.
Yeah.
Why? Banking's hard. Technology's hard. And that's why both sides need to work together, which is why I'm excited about what I do with legacy banks and fintech startups, because a bank, and by the way, Germain, the banks I talk to, their IT department is a guy with the USB token updating Windows on desktops, right? They don't have the resources. So they rely on their core providers. Let's face it, most old school core providers are a little slow. You know, their architecture is monolithic, not microservices. And so all of these changes, then PPP hits, these core providers couldn't update the systems fast enough. So they went to alternative providers. Now those alternative providers are getting in the mainstream, right? It's changing a lot. I mean, really, the last 2 years, more change than I saw in the previous 8, honestly. And I'm sure you've seen from your perspective as well.
No, yeah, we are seeing a huge traction on it. So we know we have Money 2020 around the corner. You know,
Yes.
We are all excited on going back to the in-person events, to meet people, shake hands. So, and you're a speaker there. So I don't want to spoil your presentation here, but just give a clue of what are you going to release there.
I'm going to emphasize the point you made, which is we're all excited to get back to in-person meetings. Money 2020 is absolutely the best event for everyone. Hope my community bank friends will join us. And on Sunday, I'm hosting a workshop that covers a range of subjects for community banks, including digital assets, digital onboarding, how to win with digital. But the session that I'm speaking on is how can banks evaluate a cloud core, right? Everyone talks about, oh, old cores are, monolithic. We got to stop doing that. But I've talked to bankers. I had a banker, Jermaine. He had an RFP he wanted to send out. He was going to send it to FIS, Jack Henry, and Fiserv. And I'm like, well, what about a cloud provider as an alternative? He said, I don't even know which one I would send it to. Had no idea how to compare them. So I've got an architect, the founder of Modusbox. He and I are going to be on stage, and we're going to look at it from a business perspective, architecture perspective. How would you choose a new cloud core as a banker, right? I think that's something that the industry really needs to dig into.
That's great. That's great. And well, of course, thank you very much for your time today. My last question, but you already covered is always what is the one piece of advice that you have for the banks, but you already covered part of this, and I don't want to spoil your next Money 2020 presentation. So it was amazing talking to you, and look forward to be there on Sunday at that presentation, so we can learn, we all can learn from it. Thank you very much.
I really appreciate your time, Jermaine. This has been fun. Looking forward to seeing you in Vegas.
Great.